We live. Yeah, we are live, Aaron. So we ready to tell these secrets. Hi, everyone. This is Theresa. Listen, I am coming to you live from Reynoldsburg, Ohio, in Columbus, the suburb of Columbus. So Central Ohio, located right in the center of the state. And listen, I wanted to talk to you today about the secrets. You know, every week we try to bring valid, valuable information, and hopefully today it is no different. If, you know, we would love to have your participation, your comments, your questions, whatever it is you need to know, please ask us because we've got some information. As a matter of fact, today we're going 24 years deep in my office. We're at my home office and we are going 24 years deep, digging through the crates, as some people might say, pulling out old files, finding old clients, and just kind of reviewing some of the things that we've done over the last 24 years. So let me introduce myself really quick. My name's Theresa Barron. I am the broker and the owner of Take a Look Real Estate Brokers. And I always want to give fantastic value. You know, what I'm trying to do is educate the public, be a community servant, be a resource. And, you know, as I move forward in kind of topping off my career, you know, we want to add value to the lives of the people that we come in contact with. And luckily, you know, we've got social media, which allows us to get in front of people and give them the information. It's not always translated through the typical media. So you don't always get what you really need so that you can make intelligent decisions. We'd love to do business with you. So if you find what we do valuable and you think that we would be a good fit for you, we are here to serve and we are really ready to do that. So listen, today we're talking about secrets in the mortgage industry. And one of the reasons why this came up as a topic of conversation is because I'm hearing all day long people talking about interest rates. And I want to say that interest rates matter, but to me, it's not the most important thing. And it is a way to keep consumers kind of their eye off the ball, if you would, you know, their eye off the ball, because interest rate is the number one thing that people are looking at when they're looking at a mortgage. But I promise you, the interest rate that you're looking at is not really what it appears to be. I remember some time ago, one of the captions that we put on one of the advertisements for one of the listings that we took, and this has been many, many years ago, so let me see if I can get this straight. We put a caption on it that said, you know, this $200,000 house, we guarantee we could save you $56,742 in interest on the house. And there was a way that we said that, and we meant what we were saying. We said that in a manner in which we wanted to capture people's attention because we learned some things about how money is calculated. First of all, mortgages are about time. Let me make that clear. It's about time. I'm going to give you an example, and I got Erin in the background so she can help me to make this clear. And in this example that we're going to give, I'm going to talk to you about a loan I'm making to Erin. It happens to be a mortgage, so hopefully you follow me, but it happens to be a mortgage, and it's going to be we're going to give her a $12 mortgage, y'all, today. Erin, are you there? Can you hear me? Erin, you're not there. Lord have mercy. Where you at?
I am here.
Okay. Okay. Don't be muted because you got to be in this example. I want to show people and demonstrate how important it is to understand how these mortgages go. So I'm loaning you a $12 mortgage, Erin. How about that? Okay, and with this $12 mortgage, I want you to pay me back $1 a month. And unfortunately, because it's so little, I'm going to put a 10% interest rate on it. How about that? How you feel about that? Okay, now you're going to pay me back $1 a month, and just naturally, at the end of that 12 months, how much do you owe me if you were just thinking about it?
I would think $1.20.
You think you owe me $1.20, right? No, Erin, you didn't read the fine print. See, let me explain to you. This is a mortgage, and mortgages are set up on schedules. And the deal is that at the end of 12 months worth of paying, I know you paid me $12. You paid me my money back, but at the end of the 12 months, you don't owe me $1.20 interest. Guess what you owe me, Erin?
What?
$9.99, because it's a mortgage. Did you understand that?
Yes.
Okay. See, guys, let me explain to you. Mortgages have an amortization schedule, and an amortization schedule is just a contract and a setup for how payment will be applied. It tells you how the interest and the principal will be applied over the next 30, 25, 20, 15, or 10 years, depending on what you sign up for. So let's get an example with a $200,000 home, which is more in line with reality today. See, if you were borrowing money at 4.5% on a $200,000 loan, let's just say you were doing that, here's the deal. You would be paying approximately at 4.5%, $1,013 a month for your principal and your interest. Now, let's not get it twisted. Your payment would be bigger than that because you still have taxes and insurance, and a lot of times you have PMI to add on that. We're just talking about the two parts that are the parts that you need to understand as it relates to a mortgage, because it makes all the difference in the world in terms of how long you want to sit on this money. So it's $1,013 per month, and that payment is split up for the first year like this. So if you've got a pen handy, write this down. $270 a month will go to your interest of that $1,013 that you're paying. And in addition to that, $745 a month or so will go to your, excuse me, let's go, I said that backwards. $270 a month will go to your principal, fixed. $745 per month will go towards your interest. So if you look at that, look at those numbers. At the end of the first year, you will have paid about $12,000, just a little over $12,000, but your balance at the end of the first year will be $196,498. So you really have only reduced your balance by $3,240 after you paid $12,000. And if you take this and you take this for the entire 30 years, you're going to pay back at 4.5%, $813.82. And guess what that is? That's about an 80% increase over what you pay. So when we talk interest rates of 4.5%, I want to talk to you about the amortization schedule. I want you to understand that it's not a 4.5%. It's not a true 4.5% because everything is set up on schedule. But let me tell you something else. There are things that you can do that are very practical and very easy that don't cost very much money that can take years off your mortgage. And I think a lot of people are familiar with doing a biweekly plan. That's good, but that's not what I'm talking about. The biweekly can take about 7 years off your mortgage program. And 7 years times 1,013, that's a pretty good sum because it's $12,000 a year times 7, so you'll save some money there. But the thing I want you to consider is not just that. Let's talk about advancing the amortization schedule. See, what you can do with a mortgage is you can advance the amortization schedule. It's not a difficult thing to do. What you do is you drop money on the principal and it lowers your balance. Because the interest is determined based on balance, not on anything else. It's strictly based on a balanced schedule. So at $200,000, you're going to pay an average of $745 a month in interest. But let me just look at the schedule because I got it right here in front of me, and I'm going to tell you where you can get it as well. Okay, so at $200,000, you're going to pay around $745 for that first 12 months in interest. But let's just say that we could get our balance down to $181,000 instead of being at 200. Let's say some kind of way we could, put some money on this deal and get it down to 181,000. At 181,000, you're increasing the amount going directly towards your principal by about $75 per month. And if you were to follow that schedule that they set and not advance it, not hurry up and put money on that principal, it would take you from 2018 all the way up to 2023 to get that done. Now, what most people are usually trained to think about is a down payment. My question, and what I've never been able to understand, why anybody would want to make a down payment on an amortization schedule. See, a lot of times people have this lump sum, they've got it in their 401ks, they got it in their 203Bs, or they just have money set aside. They talk about down payment. If you take $20,000 and put a down payment on a purchase that you're getting ready to make, I want you to know something. With today's interest rates, it's only about $4.75 per thousand that you're going to reduce your payment. Do you get what I'm saying? So if you've got a $200,000 debt that you're getting ready to create, a mortgage, and you drop $20,000 to bring it down to $180,000, your new mortgage payment is only going to reduce down $100. Is it worth it? Is that worth it? Heck no. Why in the world would you want to do that? Here's what I want you to do. I'm going to give you some specific instructions. It can get a little confusing because you're not looking at schedules and tables and paperwork. And usually when I'm teaching this, I'll have it all laid out in front of somebody and break it all the way down. I'll show them exactly how you do this and exactly how you save. I mean, thousands. This one thing alone can save you, like I said, $50, $60, $70, $80, $90,000 in years of mortgage payments. It could save you just a ton of money. So here's what I want you to do. Put the least amount down, as low as you can go. If you got some money, hold on to your money. Take that money and set it aside for just 1 second. Put as little as you can come up with. If the lender allows you to come up with 3% or 1.5%, or you get to do a 0% type deal, do that. Forget about the interest rate because it's not going to vary very much. If you are, you've got, fairly decent credit, it's going to be somewhere right now between 4.25% and 5.25% at one point. Don't worry so much about that. What I want you to focus on is just getting the contract set and getting into your terms. Make sure you don't have anything that's got any prepayment penalties or anything like that, because that's where they try to get you. If you understand it, then that's not what you want. What I want you to do is I want you to take that $20,000 and keep it, set it aside. In the meantime, allow them to set the amortization schedule. So we know what the new payment is. New payment is going to be $1,013, principal and interest. Now, here's where we can really make a heck of a difference. Take that $20,000 that I told you to set aside and apply it once you've already got your mortgage. Take the $20,000 afterwards. Now drop it. Drop that $20,000 on that mortgage. Guess what? Let's see how long it'll take you to drop $20,000. If you're only getting in the first 5 years an average of $300 a month applied towards the principal, I'm going to see how long it's going to take us. It would take you literally to get to that $20,000 number from today's date. Let's say we started this mortgage next month, September of 2018. It would take you 5 years to get $20,000 worth of equity in that loan. That's how long it would take. 5 years. How many payments is that? 60 payments. 60 payments. How much interest is that? 60 payments times an average of about $700 per month. How much money did you just save? Bet you can figure that out. I'm going to leave that up to you to figure out. But if you take 700 times 60, that looks like it's about $42,000. That's the way I want you to do business. I want you to advance your amortization schedule. Get that balance down as quickly as possible. Do not put the money down up front. Put the money down after the mortgage is set. It is much more effective and it can save you a total of, did you see what I was just talking about? $42,000 in interest with just one single difference in terms of how you handle your money. Well, you know what, guys? I think that's enough. I think if you want additional information, what I want you to do is to give me a call, text me, email me, call me, whatever you wish to do. It's easier to text. My phone number is 778-8503. This is good anywhere, by the way. It doesn't matter if you're in Central Ohio or if you're in Alaska. It's okay. It works everywhere. The mortgages are pretty much the same in the United States across the board. Quicken Loans, everybody can borrow that money all across the United States. So let me explain it to you, and let's get it straight so that you save the money, keep the money in your household, keep the money for your family, and we can talk about what else we can do with that money, because we got other things we can tell you and share with you. But in the meantime, I just wanted to drop that bit of knowledge. It is absolutely critical that people get clear understanding that what you're being sold, interest rate and length and type of loan and all that, and PMI and yada, 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 that's not really what mortgages are about. They're about time and balance. Time and balance. And I want you to take that to heart. Study it yourself, learn about it, and if there's questions that I can answer, like I said, get back in touch with me. This is Theresa Barron. Aaron, I'm going to give you one last chance to correct me if there's anything else I need to talk about during this session, because I don't want to hold folks. What you think?
No, just let everyone know to subscribe to the Facebook page, the YouTube channel.
Oh, yeah, we're out there.
Take a look at real estate broker.
Right.
And then we also want any real estate agents who are interested in some really impactful free training to please join our Platinum Success Facebook group.
Yes. So guys, okay, in case you didn't hear, I can't tell how well you can hear Erin or not, but she's in the background. And what she's saying is she's saying, hey, we want, what was that you said exactly? Subscribe. Okay, good. Subscribe to the YouTube. Subscribe to the YouTube channel. We've got it out there.
I'll put the link in the video.
Okay. So the link will be in the video. It is under, I hear my kids coming in, girls. Good thing we got this on. It's Take a Look Real Estate Brokers on YouTube. We've got probably 9 episodes out there right now. And for agents, if you're an agent and you're interested in getting involved with Take a Look Real Estate Brokers and being a community servant and really, really getting involved so that you have a solid real estate career, you want some training, whether or not you really want to come with us or you want to stay with somebody else, all across the United States, really, we've got a sharing community, educating agents as well. So you can get on our Platinum Success group. They get to that link also with the Take a Look Real Estate Brokers. You do need to be licensed to get into that group. So, and if you're thinking about getting licensed and you're just interested in getting more information about the licensure process, definitely give us a call, 614-778-8503. I hope you learned something about mortgages today. Remember, it's not about rate and it's not about down payment. Forget about those two things. Get into the mortgage again at the very, very lowest down payment and rate. It only matters to a certain degree. The biggest thing is time and balance. And I will see you guys on the next broadcast. I hope everybody has a phenomenal week. Kids are going back to school. Yay! I'm so excited because I'm doing kids during daytime and him asking me to take them places. So everybody have a wonderful day. We will talk soon. Sorry I'm keeping y'all so long, but let me sign off here. Peace. Love and hair grease.